The price of Bitcoin has high probability in hitting the lows of last Friday at 113.6K based on the information that we have on the chart. Today, we're talking about the most important levels to take into consideration, also looking at several Elliott wave scenarios that could be playing out throughout the next coming days. Most importantly, to see if those levels that we have of confluence can be respected. On yesterday's live stream, we mentioned throughout the pump that we were getting that if we do get above and reject the anchored VWAP and the 50% Fibonacci when we do consider the general idea of this impulsive move to the downside, we're just forming a higher time frame wave 4 potentially that is just extending in time. When we get Fibonacci from the second wave 2 here all the way down to the wave 3, we can see that 50% Fibonacci, which is very common for a wave 4 to get rejected. We can see also the anchored VWAP. We just got above the anchored VWAP, creating that swing failure pattern from these lower highs that we formed on the 15th of October. This was a general plan that we mentioned on yesterday's stream. Right where we were at here on the stream, it wasn't great for a short. We were still pumping, but if we pump above that anchored VWAP that was just sitting around about 114K, then we could look for that rejection short position. Hopefully some of you did manage to get into that short, as we did retrace the entire pump that we formed yesterday. Now, a lot of people were taking a look at the gold chart. Gold did retrace over 5% yesterday, and people were saying people are selling gold to get into Bitcoin and cryptocurrency and all of that good stuff. But we can see that Bitcoin basically retraced the entire pump. So let's go through the scenarios. The general idea still here is that we are in a higher time frame wave 4 potentially. This is the highest probability. This is going to be my favorite scenario that I'm going to be talking about right now throughout the beginning of the video. And what we did see throughout the pump from the lows of last Friday at 113.6K, what I like to see this is a double zigzag move. There's nothing too bullish about this movement, even though there is a bullish case scenario that I want to explain throughout the end of this video. But first of all, let's go with the higher probability scenario, in my personal opinion, because this move to the upside doesn't look too great for a bullish move. Now, what I see right over here is the movement to the upside, a large correction throughout the previous weekend, okay? Then another leg to the upside, a corrective move. One more leg here throughout Monday, the correction, and another leg to the upside. What we can fit inside of this zone is a double zigzag WXY, because you have a zigzag up, a correction, and another zigzag up to the upside. Even though this higher low was very shallow, it's still a higher low. So a double zigzag for me here fits best, all right? Just hitting that anchored VWAP and the 50% Fibonacci from that higher time frame wave 3, which is kind of perfect for the scenario for the bears. I like this scenario. If this scenario comes to fruition, well, we basically formed an impulsive move to the downside in the last 24 hours after getting this pump, right? Now, this movement to the downside, I would like to see it as an impulse. It does fit nicely as an impulse because you do have the first little movements to the downside throughout yesterday, the big drop, and now this consolidation to form that 4 and 5 scenario. Now, what is most important here is going to be the bounce. If we bounce very poorly with low volume in a very three-wave choppy price action, well, this is going to be looking good for that potential wave 3, 4, and 5. This is what I would be looking for, a potential three-wave corrective structure, and there's major levels of resistance that I'm going to talk about right away. So what we would be looking at here is that impulsive move in a 5-wave structure to finish that 5th wave of the higher time frame. So the bounce that potentially is going to form throughout today, right, as we did get the drop, okay, that is going to be very, very crucial to understand, you know, where could the price reject? Well, most commonly, when we do point out here a possible wave 2, the most common area is in between 50% and the 7/8 Fibonacci from that potential wave 1 impulsive move to the downside, right? That is in between 110.8K and 112.6K. Now, inside of that Fibonacci zone, what we do have is some very important levels, okay? We do have the point of control from this entire range, basically. That zone is going to be important just a couple of days ago, we did get big resistance from that big high volume node. So if we do get that bounce and it's very choppy, this is a zone to pay attention for fake outs. If you fake out from this area at 110.8K, which is round about the 50% golden pocket zone from the drop that we had yesterday, this is a fake out territory where there's a big high volume node. If the price gets above the level and then rejects, gets back below this point of control, we can definitely consider, if the price has moved in a three-wavy structure, we start dumping down, that this could be it, guys. This could happen in the next 24 hours potentially, and then we're looking for that wave 3 that could already have the power to claim the lows at 113.6K. Okay, this is only local scenarios that could happen in the next coming days. This is my favorite scenario. So this is the most important level that I'm paying attention to, the 110.8K, potentially stretching its legs to 111.8K, which is the golden pocket, and have that fake out from this point of control. If we break out and we maintain above the point of control, then I'm not interested in speculating on this scenario. The level is broken, then higher we go. What other scenarios do we have? Well, let's clean up the chart here, okay? This is with the general idea that we are forming the higher time frame wave 4. Wave 1, 2, 1, 2, 3, 4, and 5, which is completing your third wave, double zigzag in your fourth wave, first impulsive move to the downside. We're looking at that potential bounce in a wave 2 that could take us to 110, 111K zone, right? And then look for that corrective kind of bounce that is just looking for a rollover in a wave 3. This is my favorite scenario as explained. What other scenarios do we have? Well, if this, is not the top of the fourth wave in that double zigzag, we could be forming something else here, much more complex sideways WXY, where throughout the lows from last Friday, we did pump up in a three-wave structure, okay? There is kind of a zigzaggy move to the upside here, right? Kind of a bit of a three-wave move. As mentioned yesterday, there is the potential of forming a flat structure right over here, right? That for the moment can be labeled as your wave X. Now, the problem is here, as you can see with the trends, okay, with the lines here that I have on the chart, there are many scenarios to form, okay, for the Y wave. It could be in the orange a zigzag up, which would be a general double zigzag that can't take out the highs of yesterday at 114K, but ultimately I would be looking for a kind of a double top, another double top scenario here to then roll down. The other scenario here in the white, as you can see, is a flat where you pump, you come down and you claim the lows, and then you pump back up to basically claim the highs or almost claim the highs. It could be a running flat as well. We're going to have to monitor this kind of price action throughout the next 1 to 2 days, which we will be doing in the Legends Pro community. If you want to join, you have the link down below to join the Pro community, which we do the daily updates looking at the internal price action on the 15-minute and even the 5-minute time frame. Now, what we do have also in the blue is a triangle, right? Where you just form that triangle in an A, B, C, D, E, because here you have your zigzag, wave W, your flat in a wave X, and then you probably extend throughout the next coming days, maybe entering into the weekend to fit that triangle to only drop then later on. This would still be part of that higher time frame wave 4, which is just extending a little bit in time, and then you get the drop in a 5-wave structure to complete the 5th wave that has the potential to even get below $100,000. So this one, yes, we don't have basically a major setup. We just need to look carefully at the levels. As you can see, if we were to form a zigzag to the upside, all right, in the orange, we have the rejection point, range point of control. If we were to form a triangle, we also have the potential lower high right there to be formed. So despite whatever scenario happens, this zone for a lower high at the 50% golden pocket from yesterday's drop is kind of an interesting level, regardless if it's going to be a wave 1, 2, and 3, like the first scenario that we talked about, or we forming a zigzag up, or we forming a triangle to then drop later on throughout the next coming days, okay? It's just the best zone here to consider a trading setup for a short. So these are a few scenarios. Maybe the WXY, the fourth wave, is going to extend a little bit more, a little bit of choppiness and confusion, all right? But we're just going to have to be taking a look at this throughout the next coming days on how it's developed. So it's either this or it's either this, in my opinion, where your WXY is already fitted in here, and we're just going to start rolling down here. Wave 1 is in, pretty aggressive drop. You get a bounce in a very corrective structure, move down 3, 4, and 5 to get below 103.6K. Is there any other scenarios? Well, eventually, we need to consider the bullish case. The bullish case would be on the higher time frame that we have finished this flat structure, right? Where we do have a ABC flat, all right, formed since August, 3-wave down, 3-wave up, and a 5-wave move to the downside. And we'll just have to label in the bullish case scenario that the low is in already here in a 5-wave structure. And what we have formed here throughout the last few days is either a multiple 1-2, which has extreme low probabilities, guys. The 1-2, I haven't even got it on my folders, where it is a 1-2, 1-2, and a 1-2. Your third 1-2 was the longest one, and you are retracing here well beyond the 0.88 Fibonacci from this low to the high, which is very uncommon for a wave 2. So a triple 1-2 here to basically grind and then form a third wave in the next coming days to the upside has very low probability, okay? If your second and even third 1-2s are even, higher, right? The price action is more expanding, then it has just lower probabilities, right, from the previous ones. So what would be the bullish case scenario? It would be an expanding diagonal. Now, expanding diagonals don't have the highest probability. If you are downtrending and you can fit some kind of a corrective structure, which is my favorite scenario in a WXY, either finished or we haven't finished right over here yet, we just have a flat in the middle and we're just going to form a triangle or a zigzag to the upside, I think it has the highest probability, okay, just because expanding diagonals in a motive wave have the lowest probability scenario always when we consider Elliott wave theory. So this would be it, though. It's very much a valid scenario where we have a wave 1, 2, 3, 4, and 5. Your fifth wave is longer than the third wave, so it's a valid count. Now, what we would be looking at here is that we have one wave to the downside after finish this 5-wave move. As you can see, the B wave, well, eventually we want to bounce at least to the 382 Fibonacci and potentially even going to 50% or golden pocket. The most important level of resistance, as explained on the bearish case scenario, is that point of control right over here at 110.8K. So this is the zone of choppiness, of dancing around and potentially getting that rejection. Now, this will mirror the potential bearish case, which is looking at this as a finished double zigzag. You got your wave 1, wave 2, wave 3, you're expecting the movement down to break down, okay? But you form a 3-wave corrective structure. This is the most important level of resistance. But what is the most important level of support that we need to hold? If this is going to be bullish and this is a motive wave in a 5-wave structure, well, basically, if this is going to be a wave 2 and a wave 3 later on, we need to hold the golden pocket to the 7.8 Fibonacci. Preferably, we don't hit the 0.88 because that is a rare target for a wave 2. Now, when we do get Fibonacci from the low to the highs here of this expanding diagonal, golden pocket is below the recent lows of yesterday, as you can see, at 107.5, and the 7.8 is at 105.8K zone. So this area right over here has to be a crucial level of support. Now, I do like a few levels here, so pay attention. There's only 2 levels that if they are respected, I would consider the long trade. But for this long trade, without a doubt, I would need this bounce and then another move to the downside. We do have the weekly naked point of control. It's literally from this consolidation that we had last week. Big high volume node, which is sitting at 107K, basically 106.9 if you wish. Now, of course, you could have that possible fake down and swing failure pattern from that higher low that was created on Sunday. So it's either you hold and fake out the weekly naked point of control, possible long trigger if you get back above, and if you cross the level, then the next level is 106K, which is the higher low of Sunday. These are the two levels that if they are recovered on the lower time frame, such as the 5-3 minute time frame, it is a potential sniper trade. So you can put your stop loss beneath that low just for the possible fake out, right? What if this is an expanding diagonal and a 5-wave move up and you're forming an ABC, and then the price starts gaining some steam throughout potentially, the end of the week or entering into next week, okay? So these are the two major levels. Higher low for an SFP, which is in confluence with the 7-8 Fibonacci. This is like the last line in the sand, right? That you need to hold for the bullish case scenario. Even the weekly naked point of control from last week, which was not hit at 106.9K, seems pretty good, solid level, okay? So we need to consider the bullish case. I can not only be bearish, and even though my favorite scenario is the bearish one, I would consider some longs here, guys, just in case, right? But I'm also considering some interesting intraday shorts here at the 111K zone. As I mentioned, it is the point of control of this entire range of the last 10 days, okay? So those are the scenarios here for Bitcoin. Not much more has to be said. Remember, if you are interested in trading, you got some great bonuses down below on Bluffin, on Weeks, on BTCC. If you do a minimum deposit on one of these exchanges with the affiliate link, okay, once you sign up throughout the affiliate link, you can join the VIP. Just send me a DM down below on the first link. Okay, this is where I'm sharing some higher time frame trading ideas with the community. Thank you very much for joining, guys, and I'll see you in the next one.